With everybody having a smartphone in today's society, it may seem logical to want to buy shares in the company that provides the service to that cell phone. But to date, Verizon would be arguably one of my more controversial investments, surprisingly. Now, as a shareholder in Verizon, I was very excited to see that they did well on their Q3 earnings, beating EPS estimates, and the share price jumped over 8% on that news. Now, I'm not saying that an EPS beat in one quarter warrants the stock being 8% higher. I don't think the business fundamentally got 8% better as of this quarterly release. What I think is more likely is that the share price had been so beaten down that it was kind of bound to do this on pretty much any good news. Um, you know, there was the lead issue earlier. There's the debt, interest rate fears, etc. Now, most people in telecoms tend to get in for the stable dividend yield. They tend to trade at low multiples and just pay out most of their cash flow in dividends. And right now, things on that front are looking pretty good for Verizon, and we'll get into that just momentarily. Looking over the Q3 highlights, it looks like EPS again beat expectations. It was lower than the comparable quarter prior year, but ahead of expectations. Now, the thing that I think is really driving the share price up is that free cash flow year to date was 14.6 billion compared to 12.4 billion in the comparable part of 2022. That's quite a jump in free cash flow. Considering the fact that the dividend is paid from cash, it makes sense that income-oriented investors that make up a pretty large chunk of the Verizon shareholder base would really be interested in watching those cash flow numbers. Verizon has a pretty good track record of inching its dividend up over time. However, that dividend growth has slowed to just under 2% as of the most recent increase. So, not very fast growth recently. That being said, if you combine even low dividend growth with an already pretty high starting yield of almost 8%, and then you look at the moderate payout ratio of 53%, combine that with higher than expected free cash flow, you can see why dividend oriented investors might be coming back in. They see a pretty safe and secure almost 8% yield with a potential for the dividend raises to start to go a little bit higher, maybe, if this trend continues with the cash flow. Now, while I am perfectly happy to receive that dividend, the dividend is not the only reason why I'm in Verizon stock. It's pretty simple. If Coke and Pepsi have the cola wars, then I think Verizon, AT&T, and T-Mobile are having something I like to call the 5G wars or the network wars. Verizon has previously been known as the best network in North America. In fact, it's the network used to be their slogan. When I look at how much more Verizon went deep into their pockets in 5G, it seems to me that they're determined to win this 5G war. Now, 5G presents a lot of different business opportunities for them, and I think that the winner of this war may have a little bit more untapped potential upside than the rest of the pack. Of course, since investing is about the future, and the future can't be known, I'm not positive about that potential upside. However, I think that below a certain price, Verizon presents a compelling enough value that even if that future doesn't play out exactly as I hope it might, there could still be a chance of a reasonably good return on Verizon. just for fun, let's take a look at these analyst price targets. So remember, analysts are going to have their own personal, opinions about what the future of the business is and their own assumptions and their own biases, okay? So anything they say, especially when it comes to price targets, grain of salt. Make the salt extra grainy, okay? But the highest of the highs, it seems like these guys are very bullish, $64 high. Low target from analysts, 36, average out somewhere in the low 40s. Yeah, and I would say that as far as what this thing is actually worth, I probably fall closer to the low middle of that range. And although their growth projections for the business are quite low in the low single digits, we're talking like 1.5%, 2% type growth, they still actually give the stock a consensus rating of buy. Now, remember, never buy something just because the analysts say, just because your favorite YouTuber says, just because your uncle says, just because your coworker says. You need to do the digging and understand it for yourself. As we get into my final thoughts, I just want to remind you to smash that like button like you're the Incredible Hulk, and make sure that you subscribe to the channel to catch more of my videos and hit that notification bell so that you always know. So this brings me to, how did we arrive at any of those prices that the analysts project for this, and where am I at with it? Well, I think for the low side, the analysts are assuming pretty modest growth on the earnings or cash flow. They're probably fully penalizing them for their negative tangible book value due to the amount of debt and such on the balance sheet. And, using a pretty standard 10% discount rate, assuming the, EPS projection for, I think, 2023 comes in about on the money at 483, you come out with just about 36, just a little over $36. So it doesn't surprise me that that would be a low analyst estimate. This would be a fairly, standard output for what I think would be fairly standard inputs for Verizon. Now, when it comes to that high side of 64, I was thinking about it a little bit. Maybe it is something where they're actually not penalizing Verizon for the balance sheet. Now, that doesn't quite get us to 64. Maybe they're assuming slightly better growth, or maybe using a slightly lower discount rate as well. But you might be asking, well, first, why is the tangible book value so bad? And, why would some analysts want to, ding them for it and some want to, not? Well, it comes down, in my opinion, potentially to the goodwill, right? So they have a lot of goodwill on their balance sheet, to the point where they actually have positive book value and shareholders' equity, but because you remove goodwill and intangibles when calculating tangible book value, it actually shows up as a negative if you factor in the tangible book value. So it may be a sort of a disagreement amongst analysts as to whether Verizon overpaid or not for some of their acquisitions over the years. Where if you think that they, paid a fair price and could maybe sell off divisions or whatever if they needed to, and you think they could get about what they paid for them, well, you might actually want to give them a little bit more credit and not penalize them for their negative tangible book value, because you're saying, hey, this may be, goodwill and intangibles, but we still think there's some actual monetary value to this. That's what I can think of for it. Now, on the other side, it's the more conservative thing to actually just, not count that, just hit them with just the tangible book value, penalize them for the debt, in which case, yes, you get that lower price target of about $36. I kind of fall somewhere in between, but much closer to the low side. I'm personally interested, or I became interested in Verizon once they breached below $40, mainly because I thought, hey, you know, worst case, like I don't really think they're worth much less than 35 or 36, even in kind of like chilly conditions. So I figured I could do a lot worse than getting in below 40. And in the event things happen to go well, I could be looking at, a pretty good return, but worst case, probably going to end up with like, you know, 8% or something like that if things aren't that great. They're kind of just meh. With, maybe double digit returns, 11, 12% or something like that, if things go pretty well with all the 5G and investments and everything like that. So that's just kind of where my headspace was on Verizon and why my cost basis is actually $37. So quite close to that low number you saw from Analysts earlier. Although I wasn't really looking at Analyst targets when I made my mind up on that. That was just what I happened to arrive at. So sometimes coincidentally, you end up in the same realm. Even a broken clock is right twice a day. Am I broken or are the analysts? I don't really know, but that's how I arrived at that with Verizon. Remember to leave your comments below letting me know what you think about Verizon. Also, join us on Discord, link in the description, and on the Cashflow Kings live channel, link in the description. Remember to subscribe to Cashflow Kings to be notified when we go live, which is also every Saturday, 8 p.m. Don't miss it.